Have you ever wondered about the different types of investments and how they work? Today, we're diving into a comprehensive overview of investment options, from stocks and bonds to real estate and cryptocurrencies. First off, we have stocks. Stocks represent ownership in a company. When you buy a stock, you're becoming a part owner of that company. These are considered higher risk, but can offer substantial returns over the long haul, although prices can be volatile due to market conditions. Next up are bonds. These are debt securities issued by governments or corporations. When you purchase a bond, you're essentially lending money in exchange for periodic interest payments and the eventual return of the principal. Bonds are generally considered lower risk compared to stocks and provide a predictable stream of income, although they typically offer lower potential returns. Thirdly, we have real estate investments. These involve purchasing properties like residential, commercial, or industrial spaces, with the goal of generating rental income or capital appreciation. Real estate can provide a steady stream of income through rent, and property values can appreciate over time, offering potential for capital gains. Moving on to mutual funds. These pool money from multiple investors to invest in a diversified portfolio of stocks, bonds, or other securities managed by a professional fund manager. Mutual funds offer diversification, which can help spread risk. The potential return depends on the performance of the underlying assets. Let's not forget about exchange-traded funds, or ETFs. These are investment funds traded on stock exchanges, similar to stocks. They typically track an index, commodity, or a basket of assets. ETFs provide diversification like mutual funds, but can be bought and sold like individual stocks, offering flexibility in trading. Next, we have certificates of deposit, or CDs. These are time deposits offered by banks with fixed interest rates and maturity dates. They provide a guaranteed return on your investment, but are considered low risk and typically offer lower returns compared to other investments. Then there are commodities. These are physical goods like gold, oil, or agricultural products. They can be traded directly or through commodity futures contracts. The prices of commodities can be volatile, influenced by factors like supply and demand, geopolitical events, and weather conditions. We also have savings accounts. This is a basic interest-bearing deposit account offered by banks and credit unions, providing a safe place to store money. Savings accounts are low risk, but the returns are typically lower compared to other investment options. Lastly, we have cryptocurrencies. These are digital or virtual currencies that use cryptography for security. Examples include Bitcoin, Ethereum, and many others. Cryptocurrencies are highly volatile and speculative investments, but they can offer high potential returns. So there you have it, a brief overview of the different types of investments. Each comes with its own risks and rewards, and understanding these can help you make informed decisions to meet your financial goals.